Hello, it's Bini here. Welcome to my daily analysis on the US indexes. Well, we have about 14 hours and 58 minutes as of the time of recording, right to the next FOMC meeting. If you take a look at my table there, then the target rate probabilities for this 3rd May Fed meeting, right, is standing at about 89%. For a 25 basis point rate hike. Now, I think that Fed is in trouble right now because, if it's continued to hike, then we're going to have escalating US regional bank problem. But if it doesn't hike, then there might be something that Fed knows and we don't know. And that might cause a crash in the market, or at least, a steep drop in the market. Now, why is that so? Because right now we are dealing with inflation. A rate hike in interest rates suggests that we are on the normal path to fight inflation. But with the regional banks problem brewing, for example, last night we had a huge, massive drop on the regional bank index. Right. Then what does this mean? It means that probably the market might be in fear. Now, if Fed is to continue to hike, then it means that, hey, look, Fed is telling us, okay, nothing, there's no problem. We are just on our track to deal with the inflation. But if Fed doesn't continue with the rate hike, or in June it doesn't hike, okay, or in June it starts to cut rate, that is going to create fear, the fear of unknown. And this is what is scary here, right? The fear of unknown. All right, now with this, I like to take a look at the analysis into S&P 500. This is my chart on S&P 500. I'm using a CFD fit. It might not be the same as your price fit, but it should give you a good overview. All right, first thing, right, let's take a look at the weekly chart. And this is always where I start analyzing first. Right, and if you take a look at these dotted boxes here, so every one box is a quarter. Right, then the first question we ask ourselves whether the S&P 500 is near to a resistance. I think the answer is yes, because price right now here is near to the past 2-quarter high. Okay, so that's a very obvious resistance. All right, now either with this FOMC, right, Fed is going to deliver something and that is going to blow the resistance and price is going to explode upwards. Otherwise, if it's near to a resistance, I would assume that the resistance will stay valid and that it will follow the path of least resistance, which is to head down. Now with this, let's take a look into the daily chart. Okay, so this daily chart is where I would usually execute the trade. Now, I also put up the indicator, which is called the MACD indicator, because I want to show you, all right, what I'm looking at right now. Okay, now one of the key concepts to spot turning point is the use of divergence. Okay, you can use divergence on any form of indicator, but just briefly to mention how to use divergence here. Like, let's say for example, we have price of near to the same high. So right now is near to the same high, right? And then if you spot, okay, that the high made by your indicator corresponding to each of the price high, it's at the lower high. So for example, with this histogram, the second histogram versus the first histogram, the second histogram is right now at the lower high. When priced, it's at the same high, then we call this a bearish divergence. So from here, there's the potential of a bearish divergence at the weekly chart. And if price continue to break lower, then this bearish divergence would give the market, right, to tell us that there could be a turning point, which is to head lower. Right, again, that if I take a look at the daily chart, and this is what I'm looking at. For us last night, we had a wash and rinse signal. Now, what is wash and rinse, right? Take a look at this horizontal level here. Price is right now being resisted. But, if you have a look at this particular candle, the one that I'm pointing at right now, so this one here, now it broke higher. Okay, it broke higher, right, hit right into a resistance, and at this particular candle here wasn't able to continue with the upward movement, and instead it starts to turn down. So this means that whoever who bought in here, all right, would likely be facing a loss. Okay, so we term that as a wash, and then this is a rinse, and it's a very, very effective pattern, all right, to spot a turning point at a high. Of course, then there was a sell signal for us, right? And whether price will continue to move down depends on, you know, how many of its support that you're going to break. All right, at this moment here, the first support that we are looking at would be 4,115, and this would be coming in from the higher time frame, the week wash line. And the second support level would be the week wash line as well, which comes in about 4,050. Now, these are the two critical support levels, okay, critical support levels of S&P 500. And if these two levels are broken, that means that price traded below these two levels, this would not be very good news for the S&P 500. Going forward, you might be asking me, hey Bini, what's your final target for S&P 500? I'm actually quite bearish here. All right, and if of course on the condition that each of the support levels that I've highlighted are broken. And if they are broken, take a look at this red line here. I know you can't see the number, all right, but you know that number will be around 3,915. Okay, so this is the key level or the key support that I'm looking at. All right, and if price can reach this level, we take a look again at the indexes.